Hey there, traders. What's going on? Jamie Setley here. It is April 10th, 4/10, 2019, and this is the Midweek Strategy Webinar with me, Jamie Setley. So, can you hear me before I dive in? Sound good? Can you see the charts? Let me know. Testing, testing. Testing, testing. Can you guys hear me? Test, test. Hey guys, can you hear me? Test. Testing. Testing. Can you guys hear me? Testing, testing. Can you guys hear me? Testing. Test. 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 Hey. Test, test, test. Testing. Can you guys hear me? Testing. Can you guys hear me? Hey traders, what's going on? Jamie Setley here. It is April 10th, 2019. This is the SB Trade Desk Midweek Strategy Webinar, and let me know that you can hear me and see the charts. It's all good, says Peter. Okay, super duper. All right, so we've got, for the umpteenth time, US dollar. We're on support, and hate to say it, but nothing's changed here, folks. Giant top, or going for another leg. We've got setups to play both, frankly. So you'll see that as we get into the different dollar pairs. But I want to start actually with a different pair. I want to look at, we're going to look at the dollar Chinese renminbi, right? Chinese yuan. So we are looking at offshore yuan here, and something interesting in that we've broken, albeit with, not much follow through, but we did break a downtrend line really back on March 22nd. And since that break, we've kind of pulled back some. So it's possible that you've actually got yourself a little bit of a base to work with here. You can see that the low is just above the 618 of that run up. So this is interesting to me in that maybe this holds the answer, maybe, to the broader dollar move, right? We saw this last year. So like, if we compare, just throw up DXY on here, it really is, China really is a story. We kind of bottomed back here. We had the run up, right? This is DXY. And since then, it's kind of been all over the place, but the highs and lows are there. I mean, the broad trend's there. If dollar won, if this is a bullish setup in dollar won and we're about to rip higher, then then you're going to see the dollar broadly move to the upside, in my opinion. Okay. So just something to think about. I thought it was an interesting look, especially given what we've got with going on in China, in the Shanghai Composite. So if we look at the Shanghai Composite, I think that over here. Yeah, here we go. All right, so the Shanghai Composite, if I throw this up there, longer term chart, obviously a huge run, okay? And then just look across the left. This is a daily chart. You can see that we've run into some pretty heady areas. So really going back to levels that go back to the November 2016 high over here. And that, of course, was resistance back in April 2017. It was resistance for a time in August. A little lower than that is the support from December of 2017. All right, and then the big gap down through it last March. And then if we zoom in and look at the daily candles, you can see that you did have a bit of a reversal day here. Now, not much going on. I'm just saying I think this is something to be aware of because, again, Shanghai Composite at resistance. Maybe you get, this dollar won, turning up and out of this little base. You could have you can see a little double bottom action here, right? Up through the wedge line. Even if it's just a move back up to here, that's a big move in the dollar won, and you would see most certainly a sharp dollar move to the upside, however short-lived it may be, right? It could still be pretty strong. Get that euro drop down towards what we were thinking, a couple weeks ago to get that final leg, if you will. All right. So this is something I think we should watch really close. Again, Shanghai Composite, and if I throw up let's just put the yuan up there. We'll do CNH USD. So watch China. All right. Okay. Let's move it on into the setups. All right. So ECB this morning, kind of a dud, frankly. Aren't they all these days? But the levels are playing out pretty good. I mean, as far as short-term levels are concerned, if that's your thing, we've got the real well-defined resistance, right? Up here, 1285, right? Took it out right there on ECB, came back, and we stopped right where the little circle is on this chart that has maybe an X wave, which is going to be 112.30, which is the monthly opening price. So, 50 pips up, down, all around. And my belief or my thinking here, I still think we should be open to the idea of this complex kind of correction idea, right? if we got that, what you'd be looking at is probably a move up into the 1330s at minimum, because that's two equal legs. You've got 1347 to 618. It's not as well defined, in my opinion, as 1330. Even better would actually be 1390. That does seem to be a confluence. You've got 786, and you've got where this would be 1618, right? You've got an A, B, C, X, and then you got another run. So something to think about on the upside for euro. Now, in order to trigger this, let's look at the volume situation here this morning. All right. So you can see that we had a huge volume level here, and I guess it is somewhat instructive that we are coming right back, right? That's actually a good thing, in my opinion, rather than volume breakdown and then follow through. So that's what I was saying, react to the reaction, right? Rather than predicting what's going to happen, especially in this environment where it seems to be so chaotic and every move is so short-lived, if you can even call these moves, right? So if we start to get up through here, we go to the spot chart, go to the hourly chart. If we start to get up through here, then what you've got is you've got the opportunity to throw an entry down on the high volume level, which is going to be 1256. Okay. So I'll have to go to really short-term charts here, but if we start to get a nice little impulse to the upside here, and we'll come back, look at a 1256 entry, and you'd be looking at like a 1225 stop, right? 30 pip stop, and then just see what you can get out of it, frankly. 1330 again is a possibility, but also wanted to throw in maybe 1390 sometime next week. So maybe we are opening up the door for something, a little more of a move, right? You can see you do have an hourly chart here, something of a little inverse head and shoulders pattern, and this would be considered kind of your retest, I guess, if you will, back into the monthly opening price. So we do have something to work with here, I think, or hopefully, right, in euro. So not a bad look as far as that's concerned. Okay. Dollar yen. Dollar yen actually, I really do like the short side here. Threw up that real simple chart yesterday, which is always the best, right? So if we go back to the update from Sunday, remember we did have, I'm scanning weekend headlines. We had this interesting Bloomberg article, right? It talked about, you can click on it and read it. I'm sure you did. But again, when we talk about headline analysis, as far as sentiment is concerned, you're looking for one of two things or both, but you're looking for either extreme language, right? Like plummet, right? Market plummets or market soars. But even better would be a prediction or suggestion in the headline, right? And in this case, outlook worsens in the first sentence, and that was the omens are looking bad for the yen, right? That, of course, it would be the same as saying the omens are looking good for dollar yen, right? Which is bad for the yen. So we wanted to fade that, and actually, the high ended up being right at it was right at 111.80 on Friday after NFPs, and we've been dropping ever since. So you do have, just real clean resistance here. I mean, this is a great example of just slope analysis, median line or angle analysis, whatever you want to call it. And it's simply draw your original trend line, throw it on the next pivot, and voila. All right. So if I go to a 60-minute chart, at this point, to me, it is looking like we might be maybe finishing off a 5. If so, 1, 2, 3, 4, 5. I mean, we're hourly here. It's not, it's a little This is not textbook, I guess, talking about, is this a 3, but could have a truncated 5th here. Either way, let's just say that you have 1, 2, 3 segments down. Let's call those the 3 motive waves, right? The 3 directional waves with 2 pretty clear corrections in it, right? 2 and 4. So with this, you've got the trend line back here from the March lows. I'd be looking at that 110.80 area or so as kind of a bounce area. Get a bounce area there, and we'd be looking back for resistance somewhere, probably around the 1120 to 1140 zone. We just put up a couple averages, 50 and 200 hour, that's going to be 50 or 200 hour, excuse me, is going to be up there. 4-hour chart, same thing on the 50. So yeah, there's a good idea here. I would just be aware that you do have support down here at 1080. So I'd kind of be thinking maybe bounce there a little bit. And then look to fade that, okay? And don't forget, longer term, it's totally possible that we just finished up the big E wave of the bigger B wave. Go to the long-term page to see that possibility, okay? And don't forget the seasonality for yen turns down, right? Where are we? Here we go. Dollar yen. Okay, right on cue, right? So we're lower, kind of on balance, really through kind of October. Now, see the look backs are a little different, right? Because this is going to be a 30-year look back, the red, and the 5-year is going to be a little different, right? Because 5-year dollar yen's tended to actually bottom out after this week, believe it or not, and then we rally up into May, and then we kind of bottom out in August. But longer term seasonals, including 10, 15, 20, and 30-year, are all lower on balance really through October, kind of the weak equity risk period. All right. To the Aussie dollar, super interesting here in that do we have an inverse head and shoulders here? We just put up a cleaner chart, okay? Get rid of that. Okay, and this is your neckline right here. So inverse head and shoulders potential, kind of a shoulder, head, shoulder, working higher. If indeed that is the case, then you're looking at essentially a target up near 73.69, which happens to be pretty much where the December high is. So, an interesting possibility. I do like the fact, I sent this out on Twitter last night, but the fact that the median line, which has been resistance, really since 221, right? You've got some closes, or I should say some pokes above it intraday, but recently it's really been precise in its resistance, right? Since 320, I mean, you've got 1, 2, 3, 4, 5, 6, 7, 8, 9 days where you nailed it, right? And 8 of those days was really kind of right on it, almost to the tick. And then the last 2 days, including today, you've got a nice outside bullish day today, but the last 2 days you've held it as support, okay? So that's an important consideration. And if we close above here today, and I would like to see it close above, I don't think in this environment there's really much of a hurry to like what are you going to miss here? right? I don't think there's a huge hurry to go chase stuff. But if we do hold up here, 71.33, these old highs over here, kind of horizontal resistance since 4-1. It's also the 4-1 high, which would be our opening range high for the month. You can throw an order on that, right? Maybe call it 71.36 and throw a stop below today's low. Put it 71.05, right? 30 pip stop. Even your first potential resistance is going to be up here at like 72, 200-day average high from 227. So there is a bullish, or let's call it a bearish dollar idea right here. All right. Something else to consider with the Australian dollar, and this is pretty interesting. Every once in a while I like to show you guys just some indicators of volatility and kind of like how crazy quiet it is. Check this out. See, 01, 05, hold on here. I'm trying to show you. All right. So this is daily Bollinger Band width on the bottom. The magenta dot there shows us how tight the bands were, 0.01053%. The only time ever that we've gotten to that tightness was back in August of 2014, right? You can see that back here. Back then, you did kind of meander for another week, got a spike to the upside, which would have been your false break, I suppose, in this method, because if we look at the bands, there you go. So if we look at the bands, you can see that we ended up spiking into it, right? And then you got the complete collapse in the Australian dollar. So again, this says nothing of direction. It just does say that, we've got a directional move due. I mean, I think that's a pretty realistic way to say it, right? And another thing that I'd be aware of with this is when Bollinger Bands are this tight, there is I'd say propensity for false moves. Okay, so while this is a bullish setup, and I'm more than willing to take the setup, right? The risk is clean. That's all you can ask for. I will be looking to take this setup, assuming we do close up here today around 71.50 or something. And I'll be leaving that order, as mentioned, probably around 71.36 and looking for, a move up towards at least 72, maybe higher. But I'd say be aware of 72 because if this is a false break from a really tight range, then we're going to go really hard the other direction. For fun, I do want to look back and see excuse me, if there were any other periods in history that were this tight. And it looks like there were. You got to go back to 1996 over here. And it looks like there were 94, 92 before kind of a collapse, and 1989. So rare indeed, not a lot, right? All right, let's go to the New Zealand dollar. Kiwi, I'm still kind of looking the other way, is in the downside, right? Nothing's changed here. Try to put it in real simple terms in last night's post because essentially, the October trend line off the October lows, I mean, let's be real simple about this. It was support in January. It was support in March. It was resistance in April. And to me, you broke it. It's a downtrend. You retested it. It's a good confirmed downtrend. And We want to be selling rallies, okay? So I still think resistance is up here, at least, or I should say the place where you'd want to be shorting is up here. And you know, that's if we throw up two equal legs on it, something like this, you do get 67.77, which actually I think is right where I put the order anyway. You know, so in this environment where we really don't have much of an idea of which way the dollar is going to break, you know, really stick to the individual setups, and you know, maybe being kind of a dollar hedge with an Aussie long and a Kiwi short isn't the worst idea in the world anyway. Now, I will say one of the issues that you're always going to deal with when you're trading diagonal levels like this is that, look, you could still, what if you go back and test this, and that would still be resistance, but by that point you'd have been stopped out. That is one of the tough things about trading diagonal breaks, right, rather than a horizontal break, right, because the levels change, the prices change as you go forward in time. But that's the idea as far as Kiwi's concerned, and I still think that, excuse me, I still think that there is, this count is kind of the better, or one of the better counts out there as far as A, B, and then finally a C collapse, right, and then get it over with. But again, really do want to see kind of that 67, you know, 75, 80 region hold. And obviously you don't want to get above 68. I mean, that's key. All right, so long Aussie idea, short Kiwi idea. Now we'll go to dollar CAD. I think Kelly's in here. Let me see. Yep, I see you, Kelly. All right, Kelly was asking about dollar CAD, so let's go to dollar CAD. Again, right here, the really short-term levels are pretty good in terms of playing between them, right? You've got the center line that goes back to the 2017 low. And again, this has been a pretty solid pivot for a while, especially this year, right? Early in the year, support here, support, resistance, support. But the thing is 133.50 really is a tough spot, and we're failing there today. So in terms of setup, you know, here I've talked about this before, but you've got these great levels, right? Potentially great levels for dollar CAD, but I don't really have like a pattern or a setup here at all. You know, I will say that your risk is clearly going to be defined when it comes to on the long side, because the low here from yesterday is 32.84. Below, that's the 50-day average. That's, I mean, frankly, that's just that's support. Okay, and if you break that, you can't be long. So, you know, if you want to take a flyer and be long dollar CAD against that level, go for it. I don't see it just yet. I was hoping last week, late last week, we were talking about dollar CAD, and I was hoping for something like a triangle here, right, to develop, and you know, maybe A, B, C, a little higher in D, pull back in E, and then you get a terminal thrust to the upside. Okay, that could still develop, but certainly we just need to wait, and that needs to take some time, because if you go on a shorter term chart, I mean, it's just nothing there. It's such a mess. You know, here actually, I drew these in last night too. So these downtrend lines I drew in, if you go draw back to the December high and the 328 high, and you can see that you touch a lot of pivots. Okay, so is there a directional opportunity here? Not really. I'd call it more of a range opportunity though. Like if you wanted to try the long side again, see if you can get 33.10, stop 32.80, and take it up to, you know, 33.80, maybe 34.20. My problem with that again is that this morning's high spiked right through the monthly open, which is also a high volume level at 33.50. So, sometimes it's just not there. That's okay. This is congestion. My gut guess says that we end up as a triangle, in which case from here is a little higher, right? 3 waves down, 3 waves up, 3 waves down. Let's go 3 waves up, blah, 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 right? So at best, I think we would call dollar CAD a range idea. Euro getting a little extra bid here at the European Open. I think you've got to like this idea for the complex correction deal in Euro. Hopefully we can finish up here today and hold this. And if we do, we'll be going long Euro, right? It's a good level, 1260 or so, 1256, but you get what I'm saying. All right. Let's look at stocks. Let's look at the S&P. All right, so S&P. So we are finding resistance last night, this morning, what have you. Right, kind of where I thought we would. I mean, I guess 2 points higher, but you get the idea. 28.89 a quarter, that's a level. We're trading, this morning high 29.90, 28.91 and a quarter. And as long as you're under this median line, frankly, I'm kind of thinking you could roll over a little bit. Look, from a bigger picture perspective, let's look at from down here, from the March low, okay? Got a leg up, a leg down, a leg up. I think it's safe, this is kind of a prediction that I hate getting into that, but let's think about this. From the December low, we've gone, what? Straight up for the most part. I think that's safe to say. And what I'm getting at is if you're going to have an ending portion to that pattern, a lot of times those ending portions do end up as what we call a diagonal, right? Or a wedge. So my point being is I think it's safe to say that you are towards the end of this run from December rather than the beginning. I think that's safe to say, right? You could argue about the middle, but my point being is that what you want to see is you want to see support somewhere within this and probably somewhere on this line down here, right? And you also want to see probably overlap with this high over here from March 19th, okay? That's really what creates the wedge of the diagonal. And then you get one more run, okay? One more run, and then that is it. Maybe that goes to new highs. I don't know. But from a near-term basis, I do know that we have a very minor behavior change right here, okay, with us finding resistance at this median line last night, early this morning. That's been support really ever since he gapped up on March 31st, okay? April 1st here, April 2nd, April 4th, slice below yesterday, you get the idea. So I do think there's something to work with on the short side in the very short term, but would be looking for support somewhere down here around, probably this line, maybe 28.50, something like that. Obviously, these levels I talked about last night are going to change a little bit because, because we're working with angles and we're going forward in time. All right, something else I want to do here. This is going to be a little different. So we're going to look at a couple sectors give you an idea of the stock market. So, you know, when we look at DeMark stuff, or when I look at DeMark stuff, you've got what are called setups, right? Buy setup, sell setup. That is when you get a move at 9 consecutive periods in one direction, or closes above the bar four bars prior or 4 bars lower, okay, for going up and down. So what we've got there, and then what I do is I measure that. If it's in proximity of 3 ATRs to the 200-day average, then you have what could be a pivot, right? So yesterday we actually got a couple of these triggers. So XLF was one of them. XLF, of course, is the financial spider ETF. So you can see here, the blue dots represent buying opportunities and the red dots represent selling opportunities. Well, we got one yesterday, and as you can see, you had some pretty good ones over the last, you know, since November, of course. Even the buys weren't bad, right? Going back in time, sell warnings here, October 2015 would have been obviously early, but got the idea. At least told you what kind of environment you were in. Buy one was back here in 2014. That would have been pretty good. KRE, which is the regional bank ETF. We got one there too. And you can see that you've had some here back in February. And something else to note is that the decline from up here retraced 618, and the decline from here, that rally retraced 618. Okay. IWM, which is the Russell 2000 ETF. We also got a sell warning there. Now we're up pretty good today, but I'm just saying you pay attention to this. So, you know, you had some pretty good ones back here in 2015, really good buy opportunities. This one, not so much. That's why we use stops, sell opportunities, and we're back on a sell opportunity. So I thought that was interesting that those started to trigger, or that they did trigger, and you've got potential for maybe some important sectors, right? Notably banks, financials, which tend to lead, by the way, and they've been underperforming by far significantly. And then small caps, right? Which still, their highs all the way back on February 25th still. So not confirming the move up in the indices that we've seen here over the last 5 or 6 weeks. Okay, let's take a look at the Nikkei. Here's the Nikkei. $200-day average fail. Pretty big spot too, right? 1213 high. August support. You do have a 3-wave down from the highs here in October. This to me is a complex correction higher though, so everything would seem to be corrective. 1, 2, 3, 4, 5, 6, 7, right? Elliott, we label that ABCX ABC. And then if I take you back to what I call the 200 bear touch, we got one of those. This is DXJ, which is the Nikkei, right? This is the Nikkei, because this is the hedged version. So that means this is the one priced in Japanese yen. And you can see that we did get a sell warning, or I shouldn't say sell, it's more of a top warning, I should say. So like you can see the red dots as top warnings, right? Here, 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 over here, here, over here, right? They all don't work 100%, nothing does, but they're pretty good. they're pretty good. They tell you that you are extended in one direction and you are in close proximity to the 200-day average. And in this case, I would consider this a pretty good sell opportunity for a couple of reasons. One, you've got a downward sloping 200-day average. Two, you've got horizontal levels out the wazoo up here, right? This is pretty significant. Three, you've got a trend line back here from 2012 and 2016 that cuts through highs here this year, 225, and then just 2 days ago. So that's interesting. All right, we'll do a couple commods. Okay, so gold and silver. I think it was last week when I wrote on these. So that's possible that you do have lows in for gold and silver here, but really wanted to see us get through kind of some trend line action, and we've done that today so far. So you're up through, this is just the line off the highs, that's simple, and we are through those levels. So, I'd consider the long side on gold at this point. Really probably just want to trade against the low from this morning, frankly, which is 1304.60. Don't want to probably get much below there, right? That's a pretty good level too. You can see it's this low from over here from February 19th, or sorry, February 14th. And then if we look at silver, silver still suggested resistance up here. Silver still has not gone through it. So silver's lagging. If I had to have a complaint about, upside in the metals from, excuse me, if I'd have a complaint about upside for the metals from here, it would probably just be the near-term action. Silver is underwhelming. And again, you usually, in bull markets in the precious metals, you do tend to see silver outperform gold, right? So that's not happening. So that's kind of a negative or a strike against it. But, I'm kind of really big, especially lately, given the breakdowns and correlations on really concentrating just on the chart. So you know what? Maybe I don't have to even trade silver here. Maybe I can just trade gold because gold is its own chart and gold is looking just fine to me, right? Gold's looking just fine. And not only that, but if I actually scroll out here, let me get rid of some stuff. All right, so you see these parallels here? These are parallels that are based on all the way back to the 1970s, 76 low, all right? So if I zoom back in, these parallels, we've seen pretty good action over the last 2 years off of these, right? So, good supports, support. So not a pipe dream to potentially be bullish for gold and silver, but it looks like, at least right now, especially gold, because it's acting much better. Crude oil, let's look at crude. Look, we're into some heady areas up here, folks. You've got the low from August 2018. You've got the high from Jan 2018. Also, I threw in this line yesterday. Here's a shorter term chart, but this is just kind of your original trend line for crude oil off of the lows. And it's provided resistance before, right? Of course, this is steep and you can continue to go up and tag it and tag it and tag it. But sentiment's getting up there right now. Starting to see oil stocks fail a little bit. Oil stocks are really underperforming oil itself. And it's just a really big spot. So, pull back, buy dips, pull back, buy dips. That's all I can kind of get at this point. And it does look like we're due for a bit of a pullback here. So if you pull back, I'll be watching for support. Don't have an exact level I'd be looking at this point, but it's probably going to be something like a 10-day average, because in strong bull markets, that's what tends to work. So if I go 10-day average, there it is. Currently that's 62.50, right? You're currently trading 64.50, roughly. So, you know, $2 drop in crude is a big move, and probably don't want to be stuck holding the bag right here if you're going to suffer that. But yeah, bottom line, it's a spot, it's a level. I'd be aware of it. And let's just keep in mind that we still are, folks, within kind of a really big range here. I mean, we had a huge sell-off last October. We've come back in kind of a V formation, just like the stock market, but we are at a really big level right now in crude oil, okay? Gasoline's been in the news a lot lately, and I would just draw your attention to this gas oil chart. So here's your fork off of lows, and it's super steep. And we're coming up into the upper parallel here. So I would watch this. Obviously, if you're watching crude oil, kind of want to be aware of all what's going on in the refined products. And we've had a hell of a run in gas oil, and we're coming up to a level where kind of be aware of maybe some failure up here, say around 208 or something of that nature. Okie dokie. Well, for me, that's all I've got today. Really like the Aussie idea. Frankly, I like the Euro idea too. I mean, you know, look, we found support right where this thing should have. I mean, you read the update last night, and that's a beauty right there. So the fact that, you know, we are reversing this ECB decision, which frankly I didn't even pay attention to. I could not tell you one thing that happened. All I knew was that the level was here, and that people are so obsessed with freaking central banks and everything. It's just so annoying. But I'd be looking at this as kind of, you know, looking to get in on the long side. 12, you know, call it 1255, 1260 is the level. Tight stop. 1330 first target, 13 or close to 14, 1390 second target. So, you know, in summary, kind of looking at maybe euro dollar longs a little bit below here, more or less here, but ranges are so tight that, you know, 10 pips below is actually a move these days. Aussie, head and shoulders breakout outside day, like the long there. Kiwi dollar, still like shorts, a little higher. And dollar yen, like short on a bounce. And dollar CAD, thinking triangle, but not really comfortable trading it right now. Just, you know, I think there's better setups out there. Marco just asked about EuroCAD, if I could do that. Absolutely. Well, Mark, I still have I've still got us a pretty important support here. So if we just, you know, if we just bring up the channel back to the, you know, 2015 lows, you low here, here, trying to break, doesn't break. I mean, that's all I've really got, is that I've got us kind of hold it, trying to hold up. I suppose you could say there's a tradable low above here at 149, but I don't see any other pattern here. Remember, we turned up off of this top side of this back on 225, and then market's gone nowhere. Good horizontal level. You can see where those circles are drawn right there. Right here too. So we still are holding a level, right? You're holding a level. I don't know. CAD right now to me is just, it's not CAD anything, right? I mean, you'd see dollar CAD stuck at that median line and between the month open and everything. It's just not clean, not clear. I like the euro dollar idea higher, a little better on a short-term basis, say, rather than euro CAD here, frankly. But I would say that you could do worse. I mean, there's nothing to say that you can't trade long against 149, right? You might want to also, if you're, I'm not sure how you're trading this or if you're trading it or not, but if you got up through 150.60, that would also be breaking up through the 200 average on the 4-hour chart. And you can see that that's been a pretty good average. I mean, establishing resistance on it, support on it back in September, resistance. It's not, it's not precise all the time, but it's something to be aware of. Support, right? Even recently, right? The break above it here back on March 1st, okay, came back, hit it as support, break down, resistance. So that might be something just to pay attention to. So if you got up through, 150.60, you could call it a breakout and maybe trade against this low here, right? Which would be 149.70. And at that point, you'd also be protected by the month open, which is right here around 150. So that might be a better way to think about EuroCAD rather than just thinking that it's higher because you've been holding kind of a support level, right? Maybe trade this short-term break. Okay, so I hope that helps. All right. Okay, guys. Well, thank you as always, and have a wonderful rest of your week. Hoping that we get some market moves here, right, in currency land. Maybe we can kind of smell the things brewing a little bit. You do have to like that euro reaction today. Finding the support at the month opens always a solid tell, in my opinion, that something else might be going on. All right. Okay, so have a great rest of your week and weekend and everything. Stay safe and take care. I'll talk to you guys later. All right, bye.